Hi, my name's Manny. I'm a trader here at Onyx Commodities.
Hi, my name is Jonah. I'm also a trader here at Onyx Commodities.
Okay, so yeah, it's been the last 2 days in particular have been a bit exciting. I think finally we're getting a bit more downside move on the Brent futures.
I'm bearish. You're bearish. We both agree for once. This is great. Yeah. So you've been bearish for a while. What are the drivers of your view, and why do you think it's playing out now?
You kind of have to have all your ducks in a row before you call bearish, to be honest. So it's one of those things where you really want to play contrarian, and people have tried it a few times this year. But there's always that one bull that's ready to pick up cargoes, and we haven't quite broken through contango yet, convincingly anyway. But the picture looks a little bit different this time round. We just had a very strong bull play, so really strong price action in dated. The futures went particularly flat price. I think we got back up to around $85, $86, and we're looking for that constructive summer play, which did actually materialize for the last kind of 2-3 weeks. We saw it play out. But going into another set of turnarounds, I'm looking at margins. They don't look great. I'm looking at how extended dated is. And it just doesn't look like people have the willingness to really commit this bull play all the way through to Q4.
It's tough to be a bear in the dated market, isn't it? Like,
Yeah.
what is it? 9 or 10 out of every 12 months of the year, it's better to be bullish than bearish?
Yeah, I think it's the classic, you can count the cargoes more often than not. There's going to be someone to take the cargo off you at some price. People did think for TI maybe would be more susceptible to kind of bearish price action, but it hasn't really materialized. I think since Midland came in last June, I think we've had maybe 1 or 2 pricing months where it hasn't really hit the expected levels on the differentials. But no, we've very much been in a very strong bull market for the last kind of 2 years.
I mean, I agree with you. I think it's kind of over for the bulls, at least for a little while. I've started to get bearish over the course of the last week into that huge rally that we saw.
Yeah.
I think what you said about margins is really pertinent, especially because, if you're a bull in the dated market and you're amassing cargoes and sort of working to try and play that market to the upside, it's much easier when you have fundamentals at your back, when you have that tailwind. And we don't really have that right now anymore. It feels like margins are weakening. Some of the physical markets that tend to lead the rest of the crude complex, like WAF, they trade very far ahead because they're so distant from the demand centers. Voyage-wise, those physical differentials have started to come off.
Yeah.
And that's basically what's been the driver of me getting bared up.
Yeah, actually, I think it did. I totally agree with you about WAF. The reason I like to look at it as well is because it's a great export grade into the east.
Yeah.
So typically for dated, if local refineries don't want the crude, they're going to arbit east. So that's typically to like China, South Korea, etc. So WAF is a great one to keep an eye out on because it trades firstly a cycle ahead.
Yep.
So it can give you a better idea of forward demand for those grades, and also because it is the one that they do quite like taking.
Yeah.
So yeah, it is a great indication. And with that, we've seen quite bearish Dubai price action actually for the last 6 weeks, I would say. Like pricing this month really did not do particularly well. So for me, that's really what kind of started my interest in, are we about to turn here?
Interesting. Yeah, you've been bearish a little bit longer than me. I've recently gotten pretty bared up, and I think this is the moment where the range for flat price shifts from kind of 75 bid at 90 in Brent to maybe 70 or below bid at 85 max. I think like kind of coming out of this summer driving season, going into turnarounds with all these physical indicators like margins and differentials and key grades, Dubai as well, sort of all weakening. I think this could be the moment, in fact, probably will be the moment where we finally break through this, frankly, kind of boring range that we've been in this year. I think this is where we kind of puncture the bottom of it and head lower. I don't think geopolitical risk is a factor. I think, Iran doesn't want a direct confrontation, and it would take an Iran direct confrontation plus something drastic like shutting the Straits of Hormuz to actually curtail enough supply to offset the amount of spare capacity that's out there. I don't really see a macroeconomic recession either, but things got a little bit overheated in broader global macro markets, and I think that that's probably cooling off a bit now. That sort of sentiment and narrative that could easily help
Yeah.
risk assets trade lower, and yeah, beyond the crude fundamentals. For once this year, positioning has been really important this year. It's been, in the absence of like a huge fundamental catalyst, it's been like a really positioning driven market. You've seen commitment of traders data show the market get max short on the lows, max long on the highs several times this year. Normally it's like once or maybe twice in a year you'll see
Yeah.
extreme positioning. This year we've seen it bounce back and forth 5
Yeah.
times. Positioning right now is kind of in the middle of the range, so you don't have that.
So the curve can move now.
Yeah, the curve can move.
Yeah.
Dated can move, Dubai can move,
Yeah. I think
flat price can move,
actually,
everything can go.
Yeah, just one point on that. Over the years, you're saying we've hit max positioning both sides. What really that's led to is a lot of stop outs this year.
Yeah.
So I know vol's kind of dropped off a little bit in the futures market, but for dated especially, all the swaps where you have to actually execute over the counter, we've had really high vol. So what that's led to is kind of aggressive price action both ways and not much of a trend or momentum following through like any reasonable amount of time, to be honest. So it might mean that actually going into Q4 we'll see bigger trends, kind of more sense around how the market moves on a day-to-day basis rather than quick sharp price actions.
Yeah, I agree. I mean, the trade of the year in kind of benchmark Brent space has been selling options,
Yeah.
right? This is just, you've had tremendous slack in the system, spare capacity sort of buffering price moves to the upside. To the downside, you've had pretty steady economic growth and SPR buying in both China and the U.S. Really a lot of buffers on both sides
Yeah.
of the bowling lane here,
Yeah.
and so the ball's just kind of been bouncing back and forth. I think finally, geopolitical risk has taken option premia higher, and then they just drift right back down to
Yeah.
the lows because the market doesn't realize. So from a
Real tug of
volatility
war.
perspective, yeah, selling front-end
Yeah.
options has been the trade of the year. That's probably going to continue working. Option premia just rallied again on this latest spat of geopolitical risk. I think they're going to compress right back down. But when they do, I think one good trade is to buy puts in Cal 25, DEC 25 in particular. I do think that as this range sets lower, there's sort of an increasing risk that the market could fall apart to the downside just against the backdrop of what's looking like a pretty loose year from
Yeah.
a supply and demand perspective. Just oversupply and maybe a little bit of a macroeconomic pullback could pay off on buying cheap
Yeah.
downside strikes.
And then the flows as well. I mean, for me, on the forward curve, it's looking like people have really kind of lost their confidence.
Yeah.
Typically, Q4 doesn't tend to price that well anyway. We
Yeah.
always get the November Thanksgiving sell-off.
Yeah.
I think that's been a classic for the last 3 or 4 years. So I do think it will probably, come to fruition. I think December typically doesn't price that well either.
Yeah.
And I think the market's already gearing up for that. So you look at, Ox structure, Nov deck, already all the diffs are a good $2 below where we're currently pricing. So I think the market's ready for a sell-off. It's just a matter of when. I think this year, I mean, yeah, I've definitely been bearish longer than you. It's all about timing and trading. But yeah, you just have to look for those signals where everything's aligned.
Yep.
Let's finish this ball play and dated, and then we can probably
Then the
really
market
get going.
can really retrace
Yeah.
downwards. But I think when it does, some of the more, it's been a pretty boring market for flat price this year,
Yeah.
but I think there's been some really interesting stuff going on in kind of the product cracks, some of these little niche markets that Onyx trades more of than, perhaps most participants. And I think that as flat price comes off,
Yeah.
we're going to start to see opportunities in product cracks. Right, and for
Okay.
example, one of the ones that we've been sort of focused on recently is Sing 0.5 fuel oil cracks. As the markets come off a little bit, that crack has started to perform, and there are little technical trades in some of these pockets, these niche refined product markets. Like for example, Sing 0.5 fuel cracks. We saw they're currently trading around $12.50 per barrel, around $10 per barrel. We saw the OI really ramp in that kind of prompt, talking about the prompt contract there, prompt swap month, which right now is September.
Yeah.
So OI really ramped when it was trading about $10 a barrel, and just from the flows we were seeing kind of weak hands selling to, into strong hands, which were buying. So that against the backdrop of a hot summer in Europe and the Middle East and a lot of like, kind of exogenous power demand
Yeah.
drawing more fuel and, bullish physical indicators in the Singapore bunker fuel market kind of picking up, you have one of those scenarios in that market, which you commonly see in the dated Brent market, where you have maybe not a play going on, but strong hands accumulating with fundamentals as a tailwind. And so that's kind of what's driven this big momentum rally up through those levels. And now that we're seeing OI come back off, we're starting to take the trade off,
Okay.
$2, $3, $4 above where we put it on. But, I think that it's just one example of little technical intra-complex plays revealing themselves against the backdrop of kind of an otherwise not that exciting flat
All
price
about
market.
balancing the margin, isn't it? Like
Yeah.
even with that strengthening the 0.5s, really the margin's not doing particularly well. And I think you've got to look at the light end barrel, gasoline in particular. I think it's really not looking too strong here. So for me, I like to look at the margins against DFLs, and it holds quite a nice relationship. You can kind of see when one or the other is overbought or oversold, and it looks like we're getting into a position where the DFL is potentially overbought. So that's what I'll be looking at for the next couple of weeks. And yeah, we'll catch up then.
Yeah, let's keep talking. Look out below in the meantime.